Hey everybody, Tom Gentile. I want to welcome you to a very special presentation. It's simply titled How My Team and I Trade Earnings Patterns with Up to 100% Historical Accuracy. So first of all, I'm so glad you could join me here. It's shaping up to be a very interesting earnings season. And there's a lot of things that we look at when it comes to earnings. One of the things as an option trader that I look at is how cheap some of the overall option prices are going into this Q2 earnings season. And that just makes for some much better upside as we go in. But I also want to talk about a lot of the dangers that come around earnings trading, especially to those of you that are new, right? So, if you're brand new to trading earnings, or if you're brand new to trading options, then you definitely want to pay attention here to this presentation that I want to give you. Also, if you are not brand new, if you've traded before, but you've never seen how a rules-based trading pattern works around earnings, then you're going to want to stick around too, because I guarantee you're going to learn something from me. Before I begin, however, let's do some housekeeping real quick. I got a disclaimer up on the screen. You can read this word by word, all right? I could just sit here for a few minutes and just stop talking, Ryan, but I want to mention a couple of quick things here. Number one, and I'm going to read that first line there. Stock and options trading has large potential rewards, but also large potential risk. All right. I think everybody here knows this. And then number two, I want to let everyone know I'm not your investment advisor. I'm not your broker. Okay. I'm here to educate you on something called rules-based trading, which is how I trade day in and day out, week in and week out, month in and month out, year in and year out. This is a career for me. This isn't something where I'm just kind of coming and going. And so I want to teach you some of the best patterns out there when it comes to earnings. All right. There are basically three things that I want you to walk away from today before we finish. And that is number one, how not to trade earnings season like 99% of other traders out there. Okay. There's a reason why you don't want to do this. And it's because I want you to have a career in this business, not a short-term hobby. Number two, I'm going to show you how using options, we're going to create a simple formula for predicting stock prices and how they move right after the earnings announcement. Okay, so I'm going to show you that, and then more importantly, where they are likely to contain themselves. And then the most important thing is how we trade, how my team and I trade these event-driven reports. And of course, I've got stocks for you. I have a trade that I want to share with you today as well. Out of about 5 different stocks I'm going to give you, we're going to take one of those and actually turn it into a strategy. So that's my plan. Now, before we go any further, I want you to take a look at this next graphic, okay? Because this is what I like to call trading levels. Now, trading levels are something everybody goes through as a trader, because even those of you that have been here for quite some time, I want you to think back for a moment. I want you to think back, if it may be a couple of years, if it may be a couple of decades as a trader. You all fell into at least 2 of these categories. If you're brand new, you're falling into category number 1. Now, I call that the novice category. I have it highlighted in red for a reason. This is a category where you don't know anything, and that's actually good. But if you start to learn the wrong way, all right, and the wrong way is what I call subjective trading. Subjective trading is where you take a trade, and all of a sudden, maybe it was news-based, maybe it was a pick you got from a friend or a family member. Once you put that on, you now have a level of greed and fear, depending on how much you committed to that trade. But if you're a news trader, or you're a greed trader, or you're a fear trader, or you're a hope trader, and that is all you take away from trading, you will last less than a year in this business. You will not make it. Right? I'm telling you that because if you're brand new, I want you to get past the novice trading. Okay? Everybody in here, if you're all the way down at the bottom, which is where I am and where I want you to be, that level 3 trader, everyone here has gone through these. Okay, so I mean, it's funny because I've been doing this for over 30 years, and this was before cell phones. was before the internet. It was before YouTube for sure, which is where a lot of traders, a lot of novice traders get their information. And I'm not going to say that there's nothing but bad information out on YouTube. There is good information out on YouTube, but how do you know what's good and what's not? Because I find some characters, like some of the ones I have on the screen here. Some of these guys became financial experts. They were in some other YouTube business, became financial experts. And you want to know why a lot of YouTubers teach finance? I'll tell you why. Because that's where the ad revenue is. They know they can get the most dollar for that ad revenue. And I'm telling you this because I want you to make sure that you know who it is you're learning your information from. Like I said, I've been doing this for 30 years now, before all of this. And, I know the folks that are out there that have been trading and have been teaching and are doing it right. And so keep that in mind. That's where a lot of level one traders go, is that they go for their information based on somebody who's brand new. They don't know they're brand new. They just listen to their emotion as they're talking on a channel. And I'll tell you this, in 1987, I lost my entire account and then some. I went in the red. I went in the red a lot because I listened to a person on TV who was screaming about buying something, and he hit my emotional level. And I said, wow, that guy must know what he's doing. I'm going to do what he did. And I went all in on one investment, all my money. And so I ended up learning the hard way. The good thing is I was quite young when I learned that lesson. So at that point, I decided, wow, I need to either figure this out or move out of the way and go do something else. And I decided to figure it out. So I started looking at fundamentals, and I started looking at technicals, and I moved into what's called a level 2 trader. And I had a Commodore 64, but I really started looking at technicals when I got a laptop. I had a laptop, a compact computer, and I had this laptop, and I was in the loft of the house I was living in at the time. And I started looking at indicators. And my favorite indicator at the time was stochastics, because I saw the charts going up and I saw the indicator going up, and I saw charts going down. I saw the indicator going down. And I thought, this indicator is a great buy and sell. This is the holy grail. Only until I figured out that that indicator was lagging. By the time it gave me a buy signal, the stock was already off to the races. And by the time it gave me a sell signal, the stock was already pulling back. And so, my level 2 my level 2 technical trading, I like to call it that, is that, it was a lagging indicator. And I was breaking even on most of the trades I were putting on, even still losing money, but just not at the point as if I were a novice. So then I started realizing that in order to be a true pattern trader, I had to take the technicals and the fundamentals I had, and I needed to back test them, because I needed precise entry and exit points and whether they posed a profit or not. So I became, over time, a rules-based trader, which took an objective set of rules. And there's objective set of rules in all kinds of trading. They can be seasonal, they can be trend, they can be contrarian, they can be statistical, or they can be what I'm going to show you today, which is a little mix of volatility and momentum. And so what I'm telling you is that if you find something that's subjective, that's a pattern that can be back tested, that you can use forward in time, this can become a career-based pattern. It means it has longevity. So knowing that, I want to take you to our first chart. This is my first chart I want to show you. This is a recent chart of Goldman Sachs. Now, I split this chart into two pieces. You see Goldman Sachs trading up there around $380, and it started to rotate down. And then this area right here was when we had that bank failure, the Silicon Valley Bank failure, which then floated to other banks. It was causing even good companies like Goldman Sachs to drop. And Goldman Sachs dropped from about we dropped about 360 down into the high twos. This was a 20% drop for a company like Goldman Sachs, which is a big powerhouse. Well, Goldman Sachs started to rebound, and it rebounded from that 300, the high twos, the 300 level, all the way back up to around 335. This was before its next earnings, which we were going into that Q1 season. Crowd was buying it. The crowd was buying it. We started to see a lot of volume coming in small lots. And more importantly, the option traders saw a lot of call buys happen. So retail crowd was jumping into this in those final days because they wanted to take this to earnings. So they were buying stocks, they were buying calls. Stock was trading around again 335, 340 a share right before earnings. And I want to show you what the calls look like. So take a look at the calls here. This is the call options on Goldman Sachs. This was coming into its earnings season, which was right after the 17th of April. You can see here that a call option, this is a near money call option. This is an option that's trading right near the stock price. It was trading at $6. Now, this was the April 21st options, all right? Just a couple days. It was really the end of the week from where we were at that time. So you can pick those up for about $6. That each call is good for 100 shares of stock. So you take 6, multiply it times 100. That's going to cost you $600 plus maybe a little commission, right? Now, what does the novice trader look at when they start to see Goldman Sachs going higher, but then they also, see us coming in earnings? They get a little greedy, and they see this area right here. Because if you're looking at this and you're looking at this on your broker's website, you're going to see that limited risk and you see that unlimited upside. And a touch of greed will come into you if you're a novice trader. You know what the professional trader's looking at? He's looking at max risk, yes. But you know what else he's looking at? He's looking at right down here, this break even. And with the stock trading, just below 340, you're going to need a 6-point move. You're going to need 6 points above that strike price before you get to break even. And by the way, this option expires in 4 days, right? So what ultimately happened? The earnings came out, and I'm showing you this not even a day to 2 days later, right after earnings. Ouch, because your $600 dropped down. It went from $6 to 80 cents by $1.05. So you lost $507 or almost 85% within a matter of a day or two, right after that earnings announcement came out. Ouch. And you know what? The stock dropped about 2%, which wasn't that much, but your call options dropped. And there's a reason that they dropped. I want to show you, I'm going to back up for a second. I want to show you something on the screen that the novice trader's not paying attention to. And that is the implied volatility on this option, this is a calculation that I like to call a dynamic option trader looks at. All right, most option traders look at the price of the option. They don't look at the time value. They definitely don't look at the implied volatility, right? Where that option trader is seeing all the angst and all the buildup before earnings. And I want you to think of this for a moment, and then watch what happens right after the earnings announcement. Right, that 42.72 becomes 24.99, just like that. You lose half of the volatility, nearly half of the volatility in 1 day. That is a large part of the drop in this option. Now, I know some of you probably saying to yourself, well, Tom, if the calls didn't make money, did the put traders make money? Let's take a look and see. Well, they lost money too, because the puts at that time were trading for $4.85. And you know what happened? They ended up dropping a little bit. They dropped very small amount, but the put traders didn't make money, even though the stock dropped 2%. The options were ballooned up so much in value that you lost a lot of that option price. And any of you who've ever traded options before, and you've said to yourself, whether you're trading earnings or not, you said to yourself, wow, I was right on the stock. How come I lost money on the options? Because you're not paying attention to the volatility of those options, right? And so, remember, what do we talk about? Level 1 traders. They're thinkers, they're hopers, they're dreamers. I want you to think like a rules-based trader. So the first thing I want to teach you, other than how not to trade this particular strategy in earnings, I don't want you trading this way, is I want you to get an idea on what that stock price is likely to do so that it helps you remind you why we don't buy options and hold them through earnings. So this is the first formula. The first thing I want to show you is you can use option prices like these to get a calculation of what that stock is likely to do. And then you'll get an idea of whether it makes sense to you to buy and hold through earnings, because it doesn't to me. Right? So how do we predict earnings price moves. So what we're going to do is we're going to take those at the money calls and those at the money puts, the ones I just showed you, or you could do this on any stock. Take the options just after the earnings report and check and see what they were trading at right before earnings. And what we're going to do is we're going to add those those two numbers together. So we're going to take the calls plus the puts, add them together, and that's going to become your over under on the stock. That's going to give you a number. That number is going to be the range that option traders expect that stock to stay in. Now, it doesn't stay there all the time. There's no guarantees in this, but most of the time it does. So if you take those Goldman Sachs calls, those were trading for 6, and you take those Goldman Sachs puts, those were trading for 485. Add those two together. Add 6 plus 485, you get $10.85. That is the expected range through earnings. And there's a high probability there that is going to hold. All right? So let's take a quick look at earnings reports that just happened yesterday, for instance. I mean, we're really hitting the sweet spot right now for earnings. 115 companies reported earnings just yesterday. These were the biggest three. There was Tesla, there was Netflix, and there was also Goldman Sachs, which just reported as well. Guess what? It's too late to trade any of these. And by the way, even if we backed up and looked at these, none of these would have made my list of stocks that I would want to trade, right? Because first of all, I don't trade through earnings. So I would have never traded. I would have never bought calls. I would have never bought puts, and I would have never bought the combination straddles on these three for sure going to earnings, because they just simply don't have a pattern. They don't have a clear pattern of profits, right? So do you want to see what I mean by a clear trading pattern? Because that's what I want to show you. I want to show you how my team and I make money. And I can tell you, you probably know already right now, it's not by buying and holding options through earnings. It's by looking at patterns of stocks and where those patterns are before the earnings report even comes out. Take a look at this chart. This is a past chart of Lockheed Martin, symbol LMT. Now, by looking at this, you're probably seeing something that you may have never seen before. Yeah, you see the candlestick patterns going up. And you also see there's let me throw some stuff up here. This is dividends. When a dividend announcement comes out for any stock, I have it in a D. This rectangle is earnings. And as you can see, that earnings and that rectangle's pointed up. That means the earnings report was positive. But look what happened to the stock. It dropped. Here's an earnings report that came out for LMT, and it was positive, and the stock moved sideways. So there's a clear indication here that that's not the pattern I'm looking at, because for it to drop after earnings, even if it was positive, and for it to go sideways after earnings, even if it was positive, doesn't make any sense for a pattern. Let me show you where the pattern is, though. Take a look at this. Here's a pattern that's before earnings. That is a price pattern of Lockheed Market going higher. Here's the same pattern again. And I can show you the pattern for Lockheed at this time was consistently moving higher before the earnings announcement even came out. So you know what we want to trade? We want to buy the stock, or we want to buy the call options before the earnings announcement, and we want to sell right before the announcement. That's a pattern. That's a pattern that Lockheed has shown us in the past. So price consistently moving higher, and option premium consistently moving higher. By the way, option premium is the red line. So the price pattern you see here is in the candlestick, but this red line is telling me what those 7 to 30-day options, those short-term options, whether they're being bought or whether they're being sold, right? When you see it moving higher, it's being bought. Notice what happens right after earnings. You see a drop in the red line. Notice this is a real good one right here. Up, up, up. That means people are buying the calls, and they're buying puts too, but their options are being bought ahead of earnings. As soon as the earnings come out and the unknown becomes known, boom, there's that big IV drop. This is why we don't want to be holding options after earnings. So you can see that right there. Let me show you another chart. Here's a different price pattern, and this price pattern is in PayPal. Now, I've already got it up on the screen here for you, but you can see, I mean, that's a higher earnings and it dropped in price. That's a higher earnings and it just kind of wiggled. But prior to earnings, PayPal stock drops. PayPal's options go up. Here's another one. PayPal's price is dropping into earnings, but PayPal's options are going off the chart. So you know what the trade is here with PayPal? It's buy the put options a week or two prior to earnings and get out right before earnings, because that's the pattern that we're seeing, right? Let me show you one more. And so here, this is a more recent chart. And we're looking at this particular pattern on advanced auto parts. Now, advanced auto parts doesn't have, again, it doesn't have a pattern that is up. It has a downward pattern. The price drops into earnings. IV is rising. Price is dropping. IV is rising. Price is dropping. IV is rising. And as you can see here, this stock continues to drop through earnings, but I don't want to trade it through earnings. I want to trade it before earnings. Now, our next earnings date for advanced auto parts doesn't come up until until August 22nd. That's over a month from now. So, but I want to show you this one because this is an upcoming one. But when I see patterns like this, I mean, I could short the stock, but there's a much better way. It's cheaper. There's less risk. And there's just less emotion because you have less money at play. And that would be buying put options. So when you see a pattern like this on one stock or on dozens of stocks, what do you do with it? Let me show you what the steps are. So the steps are, we see a pattern like this. I want to do a few things. I want to verify the earnings date. Okay, I want to verify when does the earnings actually announce. I want to enter during what I call the optimal time before earnings. And it's not the day before earnings. This could be a week to 2 weeks before earnings. I want to look at near money options, and that's because those are the ones that are most liquid. They're also going to be most susceptible to the moves that we want to see. I want to use an expiration date that expires after the earnings because that's the expiration date we want. We want something that expires after earnings because it's going to have that before earnings move to it. And we want to definitely exit the day before the announcement. Okay? So, taking the information I just showed you and looking at it with advanced auto parts, let's look at some options that are 7 to 10 days before earnings and see how this played out the last time that this happened. So the last time this happened was actually in May, right? So there was an earnings date that was coming up. We were looking at options that were expiring shortly after that earnings announcement. So as you can see here, if you're looking at these were the May 119 puts. They were trading for the mid price was coming in around 393. Now we already had this. This is an actual one that we published. We published this to a small part of the community, right? Our members, and this is one of several. Now, what happened with AAP is that it actually was already on the way. So we published this in the morning, and by afternoon was up a little bit. But look what happened to this one, right? So just moving up just a couple of days. And we see that this one, within no time, price was already moving in our direction, and the put premium was getting more and more expensive. And we saw a 75% return. So a few days later, it's time to exit this trade. And we got out of it. So we sent an alert, a buy alert. We sent a sell alert. Everyone that followed this, very, very happy. How are we able to figure out exactly when to get in and exactly when to get out? Is it 7 days, Tom? Is it 10 days? Is it 14 days? What is it? Well, what we're able to do is take millions and millions of bits of data, and we're able to actually crunch that. So I have some AI tech at my disposal. I call it Brutus. And my AI will crunch millions of data bits daily. And we look at earnings, we look at breakout patterns, and all of these patterns must meet liquidity, price, and historical tests. So we look at historical accuracy between 75 and 100%. We find a lot of 100%ers in here, which are the ones that we love the most. And so we'll look at those top stocks, and some of those are bullish, meaning that we see price tending to go up into earnings, and some of them we see bearish, where we see price tending to go down into earnings. But all of them, we see a push for call premium and put premium to rise, for volatility, for the red line that I showed you on the chart to move higher into earnings. Now, Brutus found 5 stocks over the next 7 to 10 trading days to focus on. I want to detail one of these out for you. Okay, I'm going to show all five of you. I'm going to show you all five, but I want to detail out one of these with you in real time. And so let's just mention this. This is not a trading alert, okay? But this is a real example of something that's coming up that I want you to pay attention to. And so here we go, folks. The stock that is coming up, the one stock I want to talk about of the top five that I have coming up in the next week to 2 weeks is Amazon. Amazon's a very popular stock. I don't know anybody that's involved in the stock market, whether as an investor or a trader, that doesn't know what Amazon does. Right? Maybe a couple of decades ago, you might not know what Amazon did. Back then, they were just basically book retailers, some book distributors. Now they distribute everything. And so Amazon, forget what they do. Forget about the fundamentals. I want you to focus on the pattern here. Look at this pattern. This pattern is as clear as day with Amazon. Now, if you were looking at this and I removed all the arrows and I removed the red line, what a lot of people focus on is they're going to say, wow, they had a miss on earnings, but wow, they popped up. Here was a beat on earnings and the stock dropped. Here was a miss on earnings and the stock popped up and then dropped. And then here was a beat on earnings and the stock dropped. So I can tell you right now, as a contrarian trader, Amazon typically does the opposite of what its earnings come out at. So if they beat earnings, it's been going lower. If they miss on earnings, it's been going higher. Very frustrating for people that want to trade through earnings. Very, very risky. We don't want to do that. You know what we want to do. We want to be that rules-based pattern earnings trader. Do you see the pattern? I'll show it to you. 2 weeks before earnings, Amazon climbs, and so does the red line. So the price is going up, the options are going up. Here's 1 to 2 weeks before, price going up, options going up. Here's 1 to 2 weeks before, price going up, options going up. And then here's 1 to 2 weeks before, price going up, options going up. But then what's the red line? The red line is for those who decide to hang out through earnings. Drop, 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 drop. We do not want to trade the red arrow. You want to trade the green. The green is before earnings. So now that we see the pattern, what do we do next? Well, here's what we do. Let's go through the checklist. Again, we're going to verify our earnings date. Our earnings date for Amazon, as I have verified it, is July 27th, 2023, AMC. Now, AMC is not the stock. AMC is after market close. Amazon always reports its earnings after the market closes. So that's going to be pretty much 4:01. So when the market closes at 4 o'clock, Amazon is going to be reporting shortly after. Now that we know that, we want to enter our optimal days before earnings, which is happening right now. So I want you to follow along with me on this one. So this one is, we're in that optimal time right now where Amazon tends to go up in price, but its options also go up because options volatility goes up. And so the next thing we want to do is use those near money options. Now, the near money options as of this broadcast are the 135 calls. We want to look at an expiration date after earnings, and that expiration date is July 28th, 2023. That's actually 1 day after the earnings announcement. Perfect. And of course, we want to exit the day before the announcement. So we're going to be exiting, we're going to look to exit this the 26th, but absolutely you want to be out by the 27th because right after that close, that's when the bubble bursts. That's when Amazon reports its earnings. And then all of a sudden, now the stock's going to do what it's going to do. But we know what the options are going to do. They're going to drop in premium. So we really are trading ahead of the herd, both getting in ahead of the herd and getting out ahead of the herd with this and every other earnings announcement we do. So let's take a look at some call options. Now, again, as of this broadcast, if you take a look, I've got a series of options here. And these are the 133s all the way out to the 137 call options. And you're seeing the option symbol, and you're seeing the quotes. I've also got some stuff on here that I like to look at, like extrinsic value, implied volatility. I've got some delta on here too. That just gives me an idea of how much the option is going to move with every $1 move in the stock price. I've got some volume. I've got some open interest. And I highlighted in green the option that is closest to the stock price as of this broadcast. With Amazon at 135.25, the 135 calls are the near money options. And so As of me grabbing this, they were 360 by 365. So, if you were going to buy these and you were seeing this print, you'd be buying them, more than likely, you'd be buying them for $3.65. Okay. Now, like I said before, I like to enter these trades that 1-2 weeks before earnings as a limit order, but I let my tech tell me the precise day of entry. It is based on what it's been looking at for the last several quarters, right? So that's the first thing we do. The second thing I'm looking at is I'm looking at a target. I want to target this at 100% or more of my entry price. And then finally, what I do is I like to exit these right before the earnings report. So if I don't get my double or my triple or whatever my target is, then I'm going to be out right before that earnings report. That's when the crowd's getting in. The crowd's getting in because everybody's talking about, when's Amazon's reporting? Are they going to beat? Are they going to miss? Are they this? Are they that? You got all these folks coming on, all these gurus and analysts coming on that are talking about Amazon. And oh, by the way, if you ever watch this, and I see this, I think this is hilarious. You see the analyst come on, and then right after the analyst comes on and talks about it, you'll see something that pops up, and it's their disclaimer. Do they own it? Do their friends own it? Does the next door neighbor own it? Does the bank own it? Does the firm own it? And most of the time you see no, all the way down the side. They don't own what they're talking about. So, we want to be in before the crowd and we want to be out before the crowd. And the example of Amazon I've shown you is exactly what we're doing. We're spotting that rules-based pre-earnings pattern. Then we're finding an actual option to trade that pattern on. And then finally, we want to plan, we want to execute, we want to manage. That's what we do. So what about these other 4 stocks that are here? All right, the other 4 stocks, let me just give you the top 5. And here they are. And by the way, Amazon wasn't my best one in terms of average return. What you're looking at here is what Brutus serves up to me on a silver platter. And so these are the top 5 stocks just going into next week. Going into the beginning of August. And so I've got BEMA, that's biometric. All right, biometric has an earnings, they actually report earnings on the 31st. Now they've had a 100% win pattern. And then I look at things like implied volatility change. I look at what does the option time premium do against the trade? What does the delta do with this trade? And how does that price pattern affect? And then finally, I look at, this is the most important one right here. What's the average return on investment? Using calls, puts, or straddles. In some cases, we get huge moves up in the options, but we don't get a clear price pattern. We'll buy both the call and the put. But in this case, we've got a 443% average return. That's biometric. Pilgrim's Pride, which is PPC, came in second. Now they're reporting earnings after market close on the 26th. They also have a 100% win pattern when we go back in time and look at this pattern. And we look at the Greeks. The Greeks all look positive. And then finally over here, we got an average return on investment, which is at 260%. Amazon clocked in at number 3. Again, we know when that pattern's reporting after market close on the 27th. That has a 242% average return. And that's on those call options, on those at-the-money call options going forward. Next is DigitalOcean. DigitalOcean is a company that's reporting earnings on the 3rd of August after the market closes. Also 100% winner going back in time. We look at the Greeks. We look at the fact that it has a better than 200% return on average. And then finally, EXP International. That is a company that reports on the 2nd of August after market close. Also 100%er. And then also has a better than triple-digit return on investment. I've told you that Amazon has a price pattern for going up. I want you to look at BMEA. I want you to look at PPC. I want you to look at DOCN. And I want you to look at EXPI. And I want you to see if you could spot the price pattern, if there is one. And that'll give you an idea of what it is that we're looking at going forward. Now, this is just 5 of these stocks. We get dozens of these. In fact, let me tell you how many are on deck this season. So we got earnings that are coming out this season, and this is happening. This is just what's happening from this week going forward. So if you take a look, we got 63 earnings stocks on deck this season, and as you can see, there's some doozies here. I got a 197%er. This is on average, looking at what patterns that has done in the past. There's 108. All right, this is coming up today. And then next week, we got 159 percenter that's popping up. And by the way, all of these are good, but I'm going to clue in on some of these bigger ones. August 27th, or excuse me, July 27th, we got 159% winner. All right. How about the month of August? Take a look at what we got coming up in August. The first, we got a 109, we got a 129, we got a 172, we got a 104. All right. August 2nd, we got 112 percenter. And then you got a 96 percenter on August 4th. There's a 129 percenter on the 15th, 116 percenter on the 16th. On the 22nd, we've got 119% potential. And so you can see here, we got several different payouts that are likely to happen here coming forward for the month of August. September, which September doesn't have a lot because, by the time we get into September, you don't see a lot of earnings coming out in that month, but we do have a few. And we've got 116% coming out on September 11th and a 229% potential ROI coming out on September 20th. Now, I got to tell you, of all the ways that I have traded earnings, and I'm going back decades, guys, this is my favorite way. You go in, you snipe out, and you're basically getting in and out ahead of the crowd. Let the crowd deal with hope. Let the crowd deal with fear, with greed. Let them think about what's going to happen, because what we're going to do is we're going to use all the data that we have at our disposal, and we are going to calculate risk, and we are going to calculate reward, and we're going to take a non-emotional view with this particular trading strategy. I got members that are taking this non-emotional view, dozens. And I'm just going to throw three of the comments up from my happiest three, what I call pre-earnings traders. All right, here's one. Made 110% in 2 weeks from one trade on PayPal. Remember the PayPal trade example I showed you? Here's a person that took this, and he's taking a 3-month vacation in Florida. Here's another one. I recently retired, and I'm using the strategy to keep it that way. I just made 250% in 13 days. Finally, 254% in 15 days, 8,557% or dollar return, $8,557 return. I finally have an investment option that really outperforms instead of eroding my account. So, what I've shown you folks is exactly my playbook for trading earnings. I don't go through them. I go in and out before the earnings comes out. If you just take that nugget alone, it's going to save you a ton of money, right? But if you really want to see how I trade and even copy my trades, then let me introduce you to my volatility or my pre-earnings trading strategy. More importantly, our alert service. It's called Brutus Alerts. What is Brutus Alerts? In summary, what I did with you over the last half hour, 45 minutes, is I've taken you on a journey where I show you how we pick these trades and then exactly what we do to pick these. And if it was an actual alert, I would email you. I would email you that alert. You'd get the entry. You get the actual trade itself. You get the entry, the limit price. You get my projected profit. And I'm even going to follow up with you on these when it's time to exit. So what do you get as a member of Brutus Alerts? Well, you get up to 2 earnings trades per week. Now, this is on average. Sometimes we have a lot more and sometimes we have less. And these are delivered to your inbox. You could also get text messaging on this as well. And just like I said, you get the entries, you get the profit potentials, you get the exits. I will get that information out to you as needed. But also, every week, my team and I are going to be with you, headed up by Mike Wade, who is my research, he's my director of research here for Brutus Alerts. And we're going to go in and give you live earnings sessions each and every week. And during that time, we talk about the overall markets. We talk about the positions that we've just closed up. We talk about our open positions, any positions that are open and what we're doing with those. And then we get to setups. We get to setups, and a lot of times we have live trades right in the live earnings session, so you can have a look over our shoulder as we are setting these trades up to be placed, right? For those of you that are brand new to this style of trading, we have a quick start video guide this comes with, along with a report of how to open your options account if you've never traded options before. We also have a community forum which allows you to talk to us and to talk to each other. This is a 24/7 live forum that you get as a member of Brutus Alerts. And then finally, what you're going to also receive is the Brutus Alerts hotline. This is your personal hotline for all things Brutus. So if you're interested in learning more about this service, then click the link that my team has just dropped in the chat box, or you can give us a call. This is my VIP line, 877-568-0407. And tell them that you're interested in Brutus Alerts. And the reason why is because we've got a very, very special price for you, an opportunity to trade the entire quarter with us. So come and join me for this entire earnings season. You'll get all my trades. You'll be able to copy all my trades. You'll be able to get the entries, the exits, the profit potentials. You'll get the weekly live streams, live sessions that we do together. You're going to get, again, the hotline. You're going to get the community forum and so much more. Quick start video guide as well. That's all yours for one single quarterly price. So you can trade with me all earnings season long, not as a level 1 novice trader, not as a chart reader, but as a true rules-based earnings trader. All right. The link is on the screen. The phone number is on the screen, 877-568-0407 if you have any questions about this. All right. So, guys, in summary, I look forward to trading with you as an earnings trader for this quarter and beyond. I hope you come and join us. Once again, any questions, give us a call, 877-568-0407. Or if you're ready to sign up right now, click on the link in the chat and you'll get our best quarterly price. I'm Tom Gentile. I hope your earnings season is a profitable one, and I hope to see you soon. Bye, everyone.